Hey traders, I'm Noah. I have just turned a $1,000 deposit into over $30,000 profit with withdrawals of $3,000. My balance is still at $27,000. Want to know how? It's all about mastering strategies, managing risks, and making smart trades. And I can teach you how to do the same.
Hello everyone. So in today's session, we are going to discuss about how to identify the market trend. We're going to discuss about how to identify if the market is in the uptrend or how to identify if the market is in the downtrend. This is my broker. This is the live account of my trading, and that is the platform I'm using. So here you can see that I'm in the right now in the buy trade of Bitcoin. My stop loss is right now at $52,000. I buy Bitcoin right at $67,000, which you can see here. So as I bought Bitcoin at $67,000, as my stop loss is right at $52,000, is because of the swing low. I put my stop loss right at a swing low because I understand that the market is in the uptrend and I can take a trade based on swing trading. And I can hold this trade for either 6 months or for 1 year because I'm expecting the Bitcoin to go higher. My stop loss, the trade I took, is also with a calculated risk because if the market goes against me, I'm not going to lose more than $1,000 on my real account. Okay, that is the risk management. If the price goes in my favor and hit $90,000 on Bitcoin, I will make a profit of $1,500. So that is what risk management is. I put a risk of $1,000 and my reward is 1.5x of my initial risk. So if price goes in my favor, I'm gonna make 1.5k, $1,500. So that is a swing trade, which I'm gonna hold for either 6 months or 1 year. I didn't take more trade on this particularly swing trade because I just want to understand how much the commission my broker will charge when the price is going in my favor. And I also don't take swing trades for like 1 year or 6 months. For that reason, I'm just holding this trade. So these are some positions I closed yesterday on 17 October. Like you can see, it was closed on 17 October. I took this trade and hold this trade for like 10 minutes before it hit my target profit. I took the trade with 4 entries that you can also see right here. And all my 4 entries hit the target profit, and I made a profit of $600 on each, and it was $2,000, $2,000 and $400 collectively. And also, if I scroll up, my last trade on gold was also profitable. This was a scalping trade on gold, which I took with a small risk of $1,500 as it was 10 lot size. So my opening price was 2,677.8, and my stop loss was right 10 pips. So it was 2,676. So see, you can also do scalping on gold if there is no news event nearby. And also my last trade on that day on 16th of October, also it made a good profit of $2,000. So I'm in a great profit on gold because gold is in a strong uptrend. And see, the trend is also a core concept. As gold is in a strong uptrend, I was only considering buy trades. I didn't take even a single trade on gold because of its uptrend. That is what we're going to discuss in our today's session, how you can identify the market trend and make profitable trades in your live or real account after you basically master trading strategy.
If you want to be a part of us, go to the description of this video and join our free Telegram channel for education and signals. Here we share free trading signals alongside with multiple educational content and also our success stories that we have accomplished in our trading world. By joining our community, you will gain access to valuable insights and real-time updates that can help enhance your trading strategies and improve your success rates.
Okay, because the market trend is basically the first fundamental core concept of every trading strategy. In our trading strategy, there are 7 core concepts that we need to basically master if you want to be a successful trader. Ignoring each or any one of these 7 core concepts can result in multiple losing trades, in multiple losing streaks, and also it can also result in a blow off account as well. For that reason, we have to master trading strategy. We have to master a trend in order to get successful in trading. So first core concept I'm going to discuss about is how to identify the uptrend and how to identify the reversal and how to identify the downtrend. So this is market structure. In our last video, you can see how to identify the valid highs and lows, because in today's video, what we're gonna discuss is how to identify the trend. Okay, so we understand price always create highs and price always creates lows. Okay, so there is a thing, if the market breaks the high, there is a high chance that the price will start to go in an uptrend, and if the market breaks a low, there's a high chance that price will start to go in a downtrend. Okay, so here if you see that the price basically break a high right there, and after the price break the high, what it basically did, it made a high, it made a low, and it again start to go higher. So now if I tell you, market always creates peak while going in a trend. Sometimes when a price make a high, low, it goes straight up in a straight bullish rally. Why it do that? It do that because of the higher time frame and higher time frame confluence of demand zone. If there's more demand on higher time frame, then price on lower time frame will create rallies instead of going by creating highs and lows. They will go in a straight rally. But in some cases, when the market is not basically in a strong uptrend on higher time frame, and on lower time frame when we are expecting peaks, so 80 times on lower time frame price creates highs and lows while going in a trend, and only 20 times out of 100 price goes in a straight rally because of high time frame confluences. So now we're going to discuss that when it do these highs and lows rallies in an uptrend, how it goes. So it create a high, it create a low. Here you can see that price just break the previous high, right? So as the price break the previous high right here, it made a high. Okay, uptrend is a bullish market structure. In an uptrend, price consistently make higher highs and higher lows. Okay, it can consistently make higher highs, higher lows. As this low is higher than the previous low, so it is the higher low. This low is higher than the previous low, it is the higher low. Okay, this is a high. The next high is higher than the previous high, so it is the higher high. The next high is higher than the previous high, so it is a higher high. So in an uptrend, price consistently make higher highs and higher lows. When the price break above a previous high, it indicates bullish momentum. After breaking this high, the price typically respect the previous low before continuing uptrend. Okay, that means when the price break a high, the price is in the uptrend. That is what it basically displayed. So it will be respecting the previous low before continuation of the original direction, which is uptrend. Okay, it will respect the protected low. Why? Because it just break the previous high, and break of high means the uptrend. Price here break the high. Okay, as we know that 80 times when the price breaks the high, it can start to move in a downtrend, right? It can start to create a low before going higher. But see, this higher low which the price created, it never went below that protected low, the protected higher low, which was only be made protected by the break of this high. Okay, so that means when the price breaks a high, it should go up, but if it creates a higher low, it should not go below the protected low. If the price breaks a high, it should respect the low and keep breaking the highs. Price made a high, low. It break the previous high. Now, as the price create a higher high, now it is falling. This low should not go below the previous protected low. Price break the high. Now the previous low has been protected. Now it will be a protected low. If the price wants to continuing uptrend, upward move, it should not break below the previous protected low. Okay. In other words, if the market pulls back after creating a new higher high, as this is a new higher high and this is the pullback, and the price is creating a potential low, it should not break below the previous low, signifying that buyers are still in control. Because if it breaks below the previous low, that is showing the strength of sellers and the weakness of buyers. So in the ideal uptrend, and we are discussing about ideal uptrend. In the ideal uptrend, price should not break below the low in the uptrend. It should not break below the previous high low, and it should just keep continuing uptrend and upward move.
We will be releasing ton of new content every week. So make sure to hit the subscribe button and turn on the notification bell so you know exactly when the new content is released.
It will be a bearish market structure. Price will consistently make lower highs and lower lows. What does that mean? That means this is a high, right? And this is a low. Price made this high. The next high is lower than the previous high, right? So this will be a lower high. Okay. Here we can see this low is lower than the previous low. So that is a lower low. This high is lower than the previous high. So that is a lower high. This low is lower than the previous low. So that is a lower low. This high is lower than the previous high. So that is a lower high. So lower low, lower high, lower low. So that is a continuation of downtrend. When the market is in a falling downtrend, it will keep giving us lower highs and lower lows. That means in a downtrend, price will keep breaking the lows and it will respect the highs. Okay. So after breaking this low, price typically respect the previous high before continuing downward. Means when the price break a low in a downtrend, even if it gives us a high, because we understand 80 times in the market structure moves by creating peaks of highs and lows, but it should not go above the protected high. And how this high become protected? Because price just break a low. So price break a low. As this is the break of low, price should not go above the protected high. Okay, that means in a downtrend, there will be multiple break of lows. Price will just keep giving us lower lows because in a downtrend, only sellers make a profit, right? And if the buyers are not careful, they will lose the money in a downtrend because every high in a downtrend is a manipulation. Okay, so in the downtrend, price keep breaking the lows, and every high of the downtrend is a protected high. Okay, so now we understand that in a downtrend, price keep breaking the lows and respect the previous highs. In an uptrend, price keep breaking the highs and respect the previous lows. And if I give you another anatomy of this example is, let's take out this example. Price is in a strong uptrend. Price made a high, low. It breaks the previous high. Now we understand price always goes by creating series of highs and lows 80 times in a market structure. So it can create a low. But if it really wants to continue the uptrend, it should not break below the previous low because now it is protected. Because if the price breaks the high, it should go up by creating high highs and high lows. And it should not break the previous low. Okay, so it will keep moving like that. The same thing goes for the downtrend. If the price break the previous low, it can create a high, but that should not go above the previous high because it is being protected. As the market just give us a new lower low, now this high should not break the previous high. And traders will still expect the price to break the new low which is formed. Price made a high, this is a protected high, and we are still anticipating the price, if it really wants to continue the downtrend, it will break the previous low. So it will keep moving in a downtrend like that. So let's discuss reversal in institutional smart money concepts. So in the ICT institutional smart money concepts, a reversal occurs when the market shifts from one trend to the opposite. It will be a market structure shift, indicating a potential change in the direction of the market. So in the downtrend, we expect the price to keep breaking the lows, right? Price break the low, price break the low, price break the low. And every high in the downtrend is protected. But what if the price break the protected high? As here we can see price just break above the previous protected high, right? So as this is the break of protected high, in that case, now the trend of downward has been shifted to a uptrend. There's a potential sign of bullish strength, and the price is more likely to go higher, because break of high means a potential sign of strength of buyers and a weakness of sellers. So similarly, in the downtrend, price is making lower highs and lower lows, like we can see here, respecting the previous high after breaking each new low. It was respecting the previous highs after breaking each new lows. A reversal occurs when price break a significant lower high in a downtrend. Reversal will happen when the price break a significant protected high, a protected lower high in the downtrend. This break signals a shift in momentum where buyers are starting to take control. After this break, instead of forming lower highs, price begin to form a higher low. Price break give us a new higher high. Instead of giving us a lower low, okay, it will just give us a higher low. Okay, because this high is higher than this low is higher than the previous low, so it is a higher low. Okay, now price will protect the higher lows, and any pullback should respect the previous lows before continuing upward. So it will start the uptrend, mean it will keep breaking the highs and respect the previous lows. Reversal from uptrend to downtrend. So in simple example, in an uptrend, price is making higher highs and higher lows, respecting the previous lows after breaking each new high. Like you can see, price was just respecting the previous lows. It was not breaking them, right? It was just respecting them. Price in an uptrend was not breaking the previous lows in an ideal uptrend. But here the price did break the previous low. After breaking the previous low, it started to break the lows. Okay? In an ideal market trend, when the price breaks the lows, it starts to keep breaking the external swing lows. Okay, and now the highs was protected, because break of low means a potential sign of downtrend. Okay, so that was an example of the reversal from uptrend to downtrend. So let's take some practical example of the market structure. Here, this is an example on XAU USD gold. And also, if you see this, what happens? This is a high, this is a low, right? So we got high and low. I'm not talking about trend here, because for me, it's still just the highs and lows. Now, see what happened there. This is a potential high, right? And after that potential high, we got a new higher high. Is that right? So as it's a new higher high, what does that mean? New higher high means a potential sign of bullish momentum. And as it's a bullish momentum, now this is a potential sign of uptrend. Now price can create a low, but it should not go below where? The previous protected low. Why it's a previous protected low? Because price just break the high, and after that every low in an uptrend is a protected low. Okay, so this is a high, and what happened? Price break the previous high again, right? As the price break the previous high, it gives us a new high right there. Now we understand it can create a low, but that low should not go below where? The previous protected low. Okay, because in an uptrend, price just respect the lows and keep breaking the highs. It will keep breaking the previous highs, a new high, it created a low, but it never went below where? The previous protected low. Because this low was protected, it is called protected low, because price just break the previous high. Price break the previous high again and create a low, but this low is a protected low. The reason behind that is because this low is a protected low. It never went below the previous low because price break the high here, and price still start to continue the uptrend. Again, a high, a low, it never went below the previous low. So that is what happened in an ideal uptrend. Okay, because in an ideal uptrend, you will make a lot of great profitable trades if you only consider one direction, buy. Because every low that you are seeing, if you're not careful, you will lose your trades. If you're expecting so much risk reward, if you're expecting so much reward on your trade, you cannot make profit with the sell trade in an uptrend. Okay, so if price is break a high, and after that you see seesaw break of highs and seesaw protected lows, so it's an ideal uptrend, and you should only have one direction of a trend, which is uptrend. So let's take another example. And there are multiple dynamic examples there as well, which we will discuss in our next session, in our next video, because in the range, that is what we call the range. See, there are multiple highs and lows at the same price. Is that right? So that is what we call range. And range is very dynamic price action, and it is not the trend. And if you're not careful on the range, you can lose multiple trades in the market, because in the range, price do not respect the highs and lows, because here if you see price break a low, it goes up. So that is the reason you have to understand how we basically take trades in the range, and that is what we're going to discuss in our next video. So here there is another example. Price made a low, price made a high. So it's a high low, lower high, lower low, lower high, lower low. So we got an ideal trend right here, because here it was a potential sign of uptrend. Okay, and after that, what happened? When the price break this low, the price break a lower low, the next high will be called protected high. So before the price start to move lower, it gave us a high, but it never went above the previous high. So even though if there is like after a market structure reversal, if there is even two lower lows and two lower highs in a straight manner, that will be still called ideal trend. Okay. And I want you to give more examples related to the ideal trend. And here, if you see this, we got a new move again. So this is a dynamic price action. And here I will not count this wick as a high, because when a wick is more than a quite threshold level, then it is invalid to call it a high. So for me, this is the higher high, this is the higher low. This will be a lower high, this is a lower low. This is a higher high, and as we expect, the price should not break below the previous high low, previous lower low, because it is being protected as there is a break of high. Price give us a low, but it never went below the previous low, and again start a continuation of uptrend. And again, there are some examples that are still dynamic price action, because see, there is a higher low, higher high, lower low, price should go down, right? But it again start to go higher. So this is dynamic price action. That is what we're going to study in our next video, because the market start and tend to move in a trend in some phases, but when the price is in a strong when the price is within multiple time frame confluences, it creates dynamic price action where it gives us a lower low in an uptrend, but still don't cause a reversal. So it's the high, low, higher high, higher low, a higher high, higher low, and again price start to go in a straight manner. So here what we got: low, high, lower low, lower high, lower low, higher high, lower low, lower high, lower low, lower high, lower low, reversal. It's a high, but I will not count it because it's not a valid high. So for me, it is a high, high low, high high, again a reversal. But was it really a reversal? Let's see. It was not a reversal, because again price start to keep highs and start to go higher. So in that phase, we saw two moves which the price make as a fake moves, because here the price was in an ideal trend, right? Because price break a low, price break a low, price break a low, and a heavy high was being protected. But what happened here? Here we saw that price give us a higher high, but did not cause a reversal. As this high is higher than the previous high, it's a higher high. So these is what we call traps, when the price give us a higher high and don't cause a reversal. And here, as the price break a low, but still did not continue the downtrend, so here's a reversal again. Here is the trap again. And that is what we're going to discuss in our next video. Okay, so I hope so you guys find this video helpful to identify ideal market trend. When the price breaks the highs, respect the lows. When the price breaks the lows, respect the highs. And when the price give us a higher high and still don't continue the reversal, it's a trap. Here again, we saw a potential sign series of highs and lows, a high, low, higher high, higher low, lower high, lower low, lower high, lower low. So here what we saw, it's a reversal. Price was in an uptrend here, but after it break a low here, it start to protect the highs. So here is again a continuation of a beautiful uptrend with dynamic price action again. Because the reason I'm discussing the dynamic price action, because when I will tell you to give me the examples, you will also see the same price action, which will not make sense, because here the price make a low, high, break a low, again give us a higher high, again give us a lower low. So that price action is dynamic, and you're not still enough knowledgeable to understand this price action. For that reason, I'm not going to deal with that price action right now, because this is for our next video. So this is the price was in a potential downtrend, right? It's a low, lower high, lower low, lower high, lower low, higher high. This low is higher than the previous low, so it is a higher low, higher high, higher low, higher high, higher low, higher high. And then the dynamic price action start, where price break a low, goes up, goes down, goes up, goes down. So it was a dynamic price action, because there were multiple equal lows at the same price, which we can see right here. And there was also equal highs at the same price as well. That is for our next session. So I hope so you find this video helpful, and we give an example of uptrend, downtrend, potential reversal from downtrend to uptrend when there is a break of high. So you have to practice, at least analyze 10 times on uptrend, downtrend, and reversal of the trends. And after that, it will be easy for you to understand the ideal market trend. And I'm going to call it off, and I will see you guys in our next video. Just our guess.
Don't forget to hit the like button, hit the subscribe button, and turn on the notification bell to not miss any new update.